Aotearoa's insurance market is characterised by reasonably high uptake. We've got about between 84 and 95% of homes covered here, although it's actually quite hard to see based on the data how high it actually is, because that data is mostly kept by private insurance companies and not released publicly. We're quite high on international standards, but not as high as other countries, say France and the UK, for example, that have public flood insurance schemes in place. We've got high market concentration, which means not that many companies over here. I think the top 4 companies own about or generate around 88% of private residential market. I talked about all perils policies before. That's a characteristic of the New Zealand market. And annual contracts, which means, and that's normal internationally to have annual contracts, but it does mean that the picture of the market can change pretty quickly within a short period of time. Another characteristic is we have the NHC, formerly EQC. It's a scheme that's greatly admired overseas. It's a scheme that's really seen us through some tough times in a really good way, and so it's pointed to by lots of people overseas and by reinsurers as well as a thing that makes them see the New Zealand market as somewhere worth investing, because it kind of gives a buffer, a risk buffer, I guess. Right, and then we have community-based pricing for most types of risk. And that's helped through by the fact that we have the NHC, and I mentioned that before. We have flat rates for NHC insurance for earthquakes and some other hazards. Right, so do we need to intervene in New Zealand's insurance market, and can we justify it? This is quite a complicated, not very straightforward kind of question. The report works through it in some detail, and I really encourage you to have a little look at what it says in there. We've talked about the importance of insurance for resilience a little bit already. One of the things particularly that, climate change obviously threatens our fiscal sustainability as a country. So insurance is a way to pass the risk from individuals to the private market. And that can help the state bounce back after a big disaster and makes us more resilient as a country. So I think insurance is incredibly important, and keeping high levels of coverage is incredibly important. There are risks, though, to intervening in a private market. So moral hazard is often brought up. Moral hazard basically means that if you're protected from the consequences of a risk, then you have a lack of incentive to guard against it. So the idea is really that if you don't charge people full whack under risk-based pricing for their insurance, then they won't take the necessary precautions to reduce their risks. So price signals that reflect risk result in more efficient outcomes is the argument. I think the problem with that idea is often that it's not in a person's control to reduce their own risk, perhaps because, for example, maybe only the council can reduce risk for you because they need to build a big flood wall that is obviously not in your power to do as an individual. Or perhaps you could raise your house by a metre, but it's actually just not possible for you financially to do that. So I think we should probably guard against moral hazard, but we should also not give it too much importance. I think the importance of it can be overstated a little bit when it comes to the individual householder and what they're actually able to achieve themselves. I think often if we have risk-based pricing, prices go up, that's supposed to send a signal to the householder to do risk mitigation, but often it will just send a signal to them that they should drop their insurance entirely, which can have negative outcomes for all of us as a country. And then the fairness question, another really gnarly one, which I encourage you to engage with. It's such an interesting topic. What is fair in this situation? Some people might not be happy to help subsidise someone who has, for example, built $1 million home on the beach, who's now upset that it's falling into the sea. Is that fair to help subsidise them? I think the question here is really how much people can be held responsible or not for their decisions and for their own bad fortune. It's quite easy, I think, to blame homeowners for their own misfortunes, but often the picture's not that clear cut. So someone may have bought their house 30 years ago, for example, and not known about climate change at that point. or they may have known about climate change, but not really understood what that would mean for them. Others may have bought an at-risk property because it was the only thing they could afford at that time. And so I think we'll see that a lot, people buying houses that are at risk because the prices are lower. So my personal feeling, I guess, on this one is that although all of us are a little bit to blame for climate change, none of us is actually individually responsible. And I think it's important that we share the burdens of climate change as equitably as we possibly can. If not, we kind of run the risk of creating, not to be too dramatic about it, a sort of a subclass of climate change refugees, really, a little bit like they're seeing in Florida at the moment, where there are a lot of people who can't afford insurance, whose houses are being repeatedly flooded, but who cannot move on because their houses, all their wealth was in their house, and their house is now not worth anything at all. Let's see what time is. I am running over time as usual. I just find this topic so fascinating. How can we keep premiums affordable and accessible for longer? Well, I think one of the first things we need to be doing is setting up a really clear climate adaptation framework and funding that appropriately. There are things we must absolutely stop doing, which is building in inappropriate areas and inappropriate ways. We should be investing in a big way in flood mitigation in the areas that need it and where it's cost effective to do so. We should be making homes more resilient where we can, and we should be also putting in place proactive, consistent, fair frameworks for how some properties will need to relocate under a process of managed retreat or planned relocation. So funding that process as well will be essential. If we don't do those things, our prices are going to go through the roof much, much faster. If we do, then we've got a chance to have a bit of breathing room and sort of move towards the future in a more sedate way. So as I mentioned, we can expect an increasing number of insurance gaps to arise over time. Some people won't be able to afford insurance, others won't be able to get it for whatever reason, because insurance companies won't want to pay for uneconomically viable properties. So when a specific peril is or is likely to become uninsurable, a government can decide to form a protection gap entity, which is essentially a not-for-profit entity brought about through government legislation, which can provide insurance protection to fill the gap, the expected gap. Now, we already have, obviously, such an entity, the NHC, which functions very well, but doesn't at the moment cover flood risk, except in a very small way for land risk. So if we were to decide to set up a public insurance scheme for flooding, we could look to expand the NHC to take on flood risks as well, or we could look to set up a whole new entity. There's myriads of different ways that we could look to set up a public insurance scheme, and the report doesn't settle on one or another, simply because there's so much more policy work and thinking that would need to be done to decide on the best outcome. But we can look to other countries to see what they've done, and many of those are covered in the report as well. Basically, there's a spectrum. You can intervene a little bit. You could get private insurers to do something like what they've done in the UK with Flood Re. Private insurers have banded together under government mandate to insure just those properties that are most at risk of flooding. Or you could go all the way to what they've done in Spain or France, which is where all flood risks are covered by a public insurance scheme. So there's lots of different ways we can do it. I think that conversation needs to be had very soon as to what we're actually going to prioritise in New Zealand.